Hello everybody, welcome back to Thinking Wealth, the dynamic investment hub. This is Alex Hickman.
Hi, I'm Frenchie.
And today we're going to talk about property investment, particularly in the UK, obviously, because that's where we're based. We know more about it here than anywhere else in the world. So we've got to keep it as real as we can. What do you want to talk about? Where do you want to start?
I think we obviously want to get on with talking about property investment in general.
Yeah.
And why people have basically invested in property for as long as I can remember. What are your thoughts? Why do people do it? Why is it such a big area?
I think everyone needs somewhere to live. They always have. If businesses operate from real estate, don't they? They operate in industrial units and retail units and whatever else. People need houses to live in. So historically, I think real estate has been where people who make money in business in particular tend to store that money in real estate.
Yeah.
Have done for the last 100 years or so, particularly when mortgages become readily available, which was really only the beginning of the 20th century. That was when we've sort of seen a big real estate boom, because you can then leverage the asset.
Mm-hmm.
With crypto, with precious metals, it's very unlikely, unless you've got some great relationships, that you can borrow money to be able to acquire it. Whereas with real estate,
As things stand at the moment.
That's right. But as historically speaking, you can only get mortgages on property, and that's why asset prices in this asset in particular keep going up.
Yeah.
The more readily available finance, generally speaking, the higher property prices go, as we saw in 2007, 2008. When that dries up, the shit hits the fan.
Absolutely.
And that's what happened.
Yeah, well, that's a great start. I think that's a great insight to why people do invest in property. Shall we touch on our experience and what we've done?
When did you buy your first one?
Well, it was 2012. I did a bit of a post, if you're following us on Instagram, the other day, on my first property investment, which you could actually see from my bedroom window, would you believe? It was a standard 3-bed ex-council house, a fairly standard refurb, bread and butter buy-to-let, and it's something, well, you just remember your first one for a long time, don't you?
Yeah, of course.
I ended up selling it actually a couple of years ago and made a decent sum on that. But yeah, as I say, buy-to-lets in general for me are probably my favourite property investment, purely because I think they're simple, they're your bread and butter, they're easy to manage, they're easy to finance, the work involved in any refurb, unless in any circumstance, I would say that the refurb element compared to a HMO, for example, a commercial conversion, is very straightforward.
I mean, we try and avoid these buzzwords, man, because the industry, the property development or property investment education industry, is just full of buzzwords and all this. It's embarrassing. When you listen to a lot of it, it's like, oh God, not that word again. Like journey, investment journey.
70-20-10. I mentioned it earlier.
We ain't here to like knock all these people.
Absolutely not. No.
But
we've been trained by
most certainly.
And enjoyed the experience that we've had with those people as well.
But you know, when you might have worked at a place for like 10 years, and you see somebody walking down the road who you work with and you didn't really get on with them. It's that feeling when I hear these words. It's like, oh God, not that word. So that's why I'm just so like when Frenchie says HMOs, it means house of multiple occupation, if you didn't know what that is, which is you rent the house out or the building individually, each room. So you might chop a house up into 4 or 5 mini studios, for example, or you might convert a commercial building, an office block, which is common now, into 20, 30 studios or apartments or something like that, because permitted development rights have been laxed over the last couple of years with Boris and co.
Well, we never build enough properties, do we, to meet demand, so I think it was seen as a needs-must scenario, wasn't it?
Definitely.
There's a lot of office spaces, particularly in town centres, that have gone free, and obviously they've done that as a result to get them filled up.
Yeah.
Obviously that was my first experience, a buy-to-let in 2012. What was your first property investment that you can remember?
Well, I went on my first investment course in 2012 as well. I got into like personal development in general, and that led me into property off the back of that. And then I bought my first property in 2013. I've still got that one actually. It's in the outskirts of Walsall.
Lovely.
A special place of hell. And but you know what? It's paid 650 quid a month on average over the last like 7 years, and that's a lot of money to a lot of people. You know.
That's why I love them. They'll always be filled. Even easier in a non-desirable or undesirable area in Walsall.
Yeah.
Yeah, I know. I love a buy to let. What about your sort of more? What's the word to use? Your more technical, your more advanced type of investment.
We'll be covering a lot of all these. What we might talk about here in the modules as we go through, but
yeah, we might be bashing the HMOs or the tag words that are used in property circles, but they're all legitimate strategies, and we will be covering every single one of them. Yeah, definitely. It's important to make that point.
There's like a difference between, once again, we'll go through this in the modules, but there's a difference between an acquisition strategy, which is how you acquire something, and a difference from that to a cash flow strategy, so how you actually make money from it. So when we say HMO, for example, that is how you cash flow it. How you acquire it could be completely different. It is completely different. Yeah. That might be don't get lost in the terminology here, but it might be a lease option or a delayed completion contract, or it could just be cash, or it could be a mortgaged or something like that. So there are two separate entities here, two separate teachings, if you like, an acquisition strategy and a cash flowing strategy. So the more technical ways and how I got into it, because I did start with, I was about 15 grand in debt. I know, once again, that's
training and that.
Training, yeah. I know that's a little bit of a cliche as well. I started with nothing, but I actually did.
Well, most people, if you ask the average man on the street, they do, unless you've been born into a wealthy family. Most people are in that same boat, aren't they? They start from nowhere, learn a thing, and then actually just get out there and have a go, don't they? You can do a lot of this training, can't you? You know, property training company after property training company, and spend thousands upon thousands without actually having a go.
Yep.
You've got to start somewhere.
Just pull the trigger. You're the best investment you can make. If you're going to lose money, learn it while you learn. Lose it while you're learning a lot. And then and then you can perceive it as an investment in your education. Then you're learning as you're losing money.
Well, it is.
Yeah, that's exactly what it is.
Exactly what it is. Yeah.
So, like options, for example, I learnt off an Australian guy. Outside of the UK, there's a lot more entrepreneurial thinking in certain countries. Like the US, for example, it's very entrepreneurial. They come up with stuff and we pick it up 20 years later. So if you look at Silicon Valley with the technology and stuff, it's far ahead of what usually the UK comes up with.
Yeah.
And they are, because of their entrepreneurial way of their culture, they tend to like have different contracts and different law that is more favourable to the creative thinker. So the Australian guy come over.
What's his name again?
Rick Otten.
Rick Otten, there we go.
He ended up going bankrupt in Australia, but that's a different story. That's public data. You can figure that out for yourself. But he come over and was like teaching us how to acquire property without putting our own money into the deals, with options and contracts and instalment sales and all this. And when you do some digging into it, this is done all over the world. It's not new. In fact, all this was done before mortgages were in place. It's only since mortgages become mainstream.
Think it's fantastic. I love how creative it all was.
It is.
And sort of opened my eyes to that, and I think it's a great part of property investment to go down.
It is, and you don't need tons of money to get into it. It obviously helps. When people say you don't need money to get into investing in property, it helps.
Of course. On the flip side of that, as we'll no doubt go into in a moment, there are plenty of strategies you can pursue where you don't need a massive amount to begin with, do you?
No.
And the ones that you're probably just about to touch on are those, aren't they?
They are, yeah.
Lease options, etc.
Yeah. And the art of it, because you can grasp the strategy fairly quickly. Anyone with like good cognition and stuff can grasp these strategies within probably 5 or 6 hours of learning them and doing some examples.
Yeah.
But the art is in how you communicate that to the people that you're dealing with.
Absolutely.
That's in the words of Donald Trump's book, The Art of the Deal. That's how you communicate it and put it together with the person across the table. That's where the art is. And that's what he taught mainly, was the sales behind it.
Rick?
Because you can learn the strategies. He taught you the strategies in a weekend.
They're all fairly similar as well, aren't they?
Different paperwork, but similar. Yeah.
So that's why you can pick up on them so quickly, isn't it?
Yeah. And you maybe a little bit complex, but depending on your tax structure, you do different paperwork on it. We don't need to get into that, but it's always something to keep in mind. If you're a higher taxpayer, you'd be doing different things to if you're a lower taxpayer and things like that. So that's something else we'll touch on in the modules, but we're not financial advisors, so we can't be giving advice in that sense. No.
Is it worth, just quickly, sorry to put in, mate, is it worth just quickly, because people might be hearing lease option for the first time, give a quick, if you can, because you're good at verbalising these things, a 30-second rundown of what a lease option is for somebody out there who's watching who doesn't know.
The best way I've ever been able to get it across first time is to use the analogy of a car lease. So you go to a car, second-hand car sales pitch, and you say, and they offer car leases, and generally speaking what happens is you put a deposit down, you then make monthly payments, sometimes with a small part of the payment coming off the price, or none of it comes off the price, whatever's agreed, and then at the end you'll have a balloon payment, I don't know, of 10 grand or something, depending on what the car is. You do the exact same thing with the exact same pieces of paper with some more legal schmeagle in it with a house than you do the car. No difference, exactly the same process. Now, in the market we're in at the moment, lease options are far more difficult to get hold of because everyone wants full price, and people are buying for cash because they've had all these money off the government over the last 12 months and whatever. These strategies work, the lease options, delay completions, things like that, the more creative stuff works in a difficult market where financing's hard to get, where sellers need to sell quickly. That isn't where we're at. So it's much more difficult to do those at the moment.
Still well worth doing for the purpose, or speaking about it, I should say, for the purpose of this podcast.
For the purpose of this podcast, I mean, we haven't been, how long have we been running? About 12 minutes or so. In the next couple of years, maximum, I can only see, 4 or 5 years maximum. These, if you can get ready to hit the market with these strategies,
absolutely,
if you can learn now, grasp them now, just try and fail numerous times to close some of these, because you will fail more than you succeed to begin with. By the time the shit hits the fan, because it's coming.
Well, you'd think so, wouldn't you?
It has to. Everything runs in cycles.
We've been speaking about it for a long time, haven't we?
Yeah. Then you'll be ready to rock and roll.
Yeah.
Like these government-backed loans, 95% loan-to-value loans that the government are backing. They're going to be giving loans to people that potentially shouldn't be taking out 95% loans on things they can't afford to have. And you're going to be the property doctor who goes in there and fixes the problem.
I think it's a fantastic strategy. I really do.
And you can sell using these as well, not just buy.
Yeah. So there you go. That's a bit about your sort of more technical experience within the property circles.
It's very exciting and it sounds great, and people, particularly in the industry as well, people sell on that, oh God, I can buy property for no money and this, that, the other. The reality is it's fucking difficult, man. Real difficult.
As you've already said, I've done a little bit of this myself. The art, as you've already said, is definitely in communicating the deal, isn't it?
And that's something we'll do in the modules.
Yeah, all parties on board, all parties signed up. Obviously, that's when you complete it. That's the big moment, isn't it? To get this done and over the line, and that's the difficult part of it.
It is indeed. But there's little tips and tricks that you can give to people to help them along the way. But essentially, people always find their own way of putting things together. Like I remember Rick Otten saying to me, he said, "You're not me. Your personality is completely different to mine, so don't copy me. Go out, start copying me, realise what you're uncomfortable with, realise what you're comfortable with, and create your own."
Pave your own way. Like.
Exactly. Yeah. And that's what you need to do.
As well, isn't it?
In anything.
Yeah, absolutely.
in anything. So walk us through, I don't know, what was the last deal you did? Let's talk about that one you did down Pensnet that we turned into an HMO and that, yeah.
Well, that was a lease option, wasn't it?
Yeah.
Yeah, so that was a lease option. It was a 5-year lease option with the option to buy at the end. Figures now, I can't 100% remember. I think the buy option at the end was 500,000. Now this was a former care home, 14-bedroom care home facility, which so really the work was already done because I converted it into a HMO. So we basically did a fairly soft refurbishment of the place and then started letting it out. But I suppose another reason why this is a good example to talk about off the back of what you've just been speaking about with lease options, you can then back those up and pass those on to somebody else, which is exactly what I ended up doing with this. I got it to a point, sort of capacity-wise, rooms let out. I think I got to about 10, and then I sold it off the back of the potential returns, annual returns. So yeah, that was a really steep learning curve. There's a lot of noise about HMOs, isn't there? Passive income is another buzzword that's used.
Definitely.
But there's a lot of management to do with a HMO, and I think that doesn't really get the attention, especially in these training courses, that it deserves and needs, because that's where you get a successful HMO or not.
In the management, yeah,
is
I
the
agree with
management
that.
of them, because it's not an easy task. I mean, if you were looking after that place, which I found out, it's not a full-time job, but it's near to. It's probably a part-time job, looking after 14 separate tenancies.
And there's very few agents that are good in terms of management, so you can't even pass them on a lot of the time.
Yeah, I mean that was actually my second experience with HMOs. I did another one which was a smaller project in terms of the conversion, the amount of rooms, but actually a bigger refurbishment. It was a former butcher's, I believe.
Which one was that one? Pensnet?
Pensnet High Street, yeah, opposite the Russell's Hall Hospital in Dudley.
That was a house originally.
Sorry,
it was a burnt out one.
Butcher's was down the road from there, a couple of doors down, I think.
Because I'll pass you that one.
Yeah, you did, yeah.
It was a burnt out old wreck.
Ideal. Yeah. Perfect. I mean, to be honest...
What were the figures on that? That was a good deal in the end, wasn't it?
Goodness me, what were the figures on that?
70 grand, something like that, purchase price.
Yeah.
Because it was burnt out to a crisp. The remaining mortgage on there was what you bought it for.
Yeah, and then I think the refurbishment work, as you say, I mean, it was nearly burnt down, wasn't it?
And you did five studios in there, didn't you?
Yeah,
self-contained.
5 self-contained studios, but as Alex has already said, the refurbishment work was a lot more because it was burnt to a crisp. I mean, each one had its own ensuite bathroom, shower, toilet, sink, its own little kitchenette. There were 5 double rooms, studio rooms, if you like, as they're called, and it ran really, really well. That I think the average weekly rent on those rooms at the time that we were getting, this was about 3 years ago now, was about £115 a week, which is damn good.
So you're looking at 550 quid a week.
Yeah, and I was getting that filled on a regular basis. Obviously you have times where somebody leaves, but that one I was able to fill quite quickly.
Yeah.
So yeah, that was my second experience with HMOs.
Then you sold that, didn't you?
I ended up selling that as a business, if you like, again based on the potential annual return. Well, not the potential, it was doing it. It was making $550 a week. I ended up selling it for something like, I think it was like nearly 200,000.
Yeah, it was.
I think it was 195,000 from memory.
So you bought it for 70. How much do you reckon you spent on it?
I spent about 65 on it. It was a big job.
So you're up to, say, 135 plus all your fees. Let's put 10 grand on it.
Yeah.
So you're up to 145.
Yeah.
And you sold it for, let's say, 195 for...
Yeah, say 200 with your fees off, say 195.
Yeah. So you made 50 grand on it.
Yeah.
And you took rent in the meantime.
Say again?
You took rent in the meantime.
Oh, of course, yeah.
So, there's... you caught it well, didn't you? You caught the market well as well. I think HMOs are getting a buzzword at the time.
Yeah. In all elements, really. I caught it well in terms of what I managed to buy it for. and then, like you say, HMOs at that point were really popular. And this is, bearing in mind, this was around the time where they were then starting to look at council tax banding per room. Do you remember? But because of the relationship that we had with the guy from Dudley Council, and I think as well it helped the fact that this had parking, didn't it, to the side, remember, which is always a necessity really with a professional HMO now, isn't it? It all worked out, fortunately. That was my second experience, mate, with HMOs. That's it.
Yeah, I don't like them. I personally stay away from them. I sell them for other people and make little bits of trading income, but I refuse to do them myself, just from the management perspective. But there's some people out there who love all that.
Yeah. I mean, to be honest, I probably would do one again, but only on that type, that scale. So, top end HMO rooms, which you know are going to sell. I think you're fine in that market. I wouldn't go down, to be honest, maybe the sort of lower end of the HMO market again, because the turnaround of tenants is constant. The management again is constant.
Yeah, I'll tell you what's a big market now in that arena is like leasing it to care providers and stuff.
Yeah,
and they take control of all management and they just pay you every month.
Yeah,
but I don't think you get, top rates. But if you want that less headache,
passive income,
as they say, passive income. But I tell you, when the roof blows off, you're on the phone. They're not going to take care of that for you. So everything's passive income until there's a problem.
Unless you get it right into your lease, of course.
Yeah, of course. I mean, that's where commercial property is probably that was my favourite. It sort of seems there's an apparent progression. It doesn't mean it happens, but you sort of start with buy-to-lets or flips, you buy and sell a couple, and then you move into HMOs, and you might try a couple of different snazzy strategies and whatever. But generally speaking, the big boys park their money in commercial property as a rule of thumb. You look at the pension funds, you'll see them in the auction houses. They'll be at the back of the room in the dark suits buying very low yielding real estate. But it'll be prime, so it might be on Oxford Street in London. It might only yield 2.5%. Sorry about that. We're back. We had to put the dog back in the house. So we're talking about commercial property.
We were,
and the low yields with the big companies who buy these things for the security that the income's going to be coming in for the next 20-25 years. They'll probably lease the building to a blue chip company or a government or public company like the NHS or something like that, and these properties have guaranteed income for 25 years, and pension funds tend to buy them.
Fantastic deal if you can get hold of one of them, innit?
If you're in that position, they're superb. Yeah, I mean, as a beginner into property and real estate, probably not worth. It's great to look at and learn and how they all do these things, but a strategy is if you can buy a coffee shop off Mrs. Smith, negotiate a deal with Costa Coffee, and then sell that in an auction, for example, you might get a pension fund buying them off you at 2.5-3% yields. That's a hell of a strategy if you get some of those.
Tesco local on a high street.
Yeah, absolutely perfect. So, and that's doable to everybody. You've just got to have the frame of mind to be able to put that together.
Yeah. You got to be capable though, haven't you?
I mean, you're not going to do as well. Don't say that. It's very unlikely you'll be doing that in the first couple of years. No. But it's very doable.
Potential's there though, is the point, isn't it? Yeah. Right. Shall we move on to finance? Another big buzzword: joint venture partners, traditional methods of finance, mortgages.
God, it's huge. It's
massive,
a huge topic. Ideally, you get yourself a broker, and they find you the best financing for the deal you're taking on. But from experience, there's a lot of brokers who are in it for their fees more than your well-being. A lot out there do that, and it's so vast, when you don't know where to start. The last 5-6 years, when I first got into this, and yourself in 2012-13, there wasn't as many lenders in the market then as there are today.
No.
It's like every other day you find new banks or new financiers that are just coming into the market, that are willing to lend at
there's
so cheap.
There's new banks, full stop, isn't there?
Yeah, challenger banks that weren't around. Yeah,
little independents.
And you know, there's different lenders have different appetites that they like to lend on different things. So this is why a good broker is vital,
essential. Yeah. Let's steer the conversation of property finance towards rather, as I mentioned earlier, joint venture finance. We've both got experience of that, and I think again, people that maybe don't have the funds to get going straight away can take a bit of comfort and confidence from this. We've both, I mean, me myself, I've attained over £200,000 worth of joint venture finance earlier in my sort of property investment career, so to speak. Journey, horrible word. So yeah, I think it's just worth mentioning that because, again, what you said earlier, although it helps to have money to begin with, that's a given, it's not a complete stopper on things, because joint venture finance is a real thing. I know people sell courses off the back of it, but we've done it, we're proof of that. So yeah, finance as a subject within property is a huge thing to talk about, isn't it? And this will no doubt again form a big module of ours within the Thinking Wealth subscription, won't it?
Yeah. Joint ventures, because joint venture finance is what you're essentially saying there is that your joint venture partner is bringing in the capital for you to do the deal. So
to touch on an example that we used earlier, the second HMO that I was involved in, Pensnet High Street in Dudley. I had joint venture finance for the purchase, and I funded the refurb. Now the joint venture partner, so to speak, he had the first charge on the property. That was his security, and then obviously once the deal ended, so to speak, in that circumstance, it was when I sold the property. He got paid back his money, and obviously made a few quid on the side as well at an agreed interest rate. So that's one example of that.
He was essentially a first charge lender, and that was the relationship you had.
Absolutely, that's what it was. Yeah. Unfortunately, at the time, I wasn't able to get finance for myself. Otherwise, I'd still have that now. That was doing well, as we mentioned earlier, £450 a week. But the second exit was to sell it, and I made 50 grand off the back of that. Exactly. So
that's an important thing to note, actually. Yeah. Go into deals with multiple exits, so you can flip it, you can refinance it, you can get another joint venture partner in if you need to tide you over until you can refinance it or something like that. Yeah. There's always ways out of things. You've just got to go into the deal knowing the ways out.
I think, like you've just done, you've touched on something there. I think property, well, investing in general, I would say, can be, I hate using the term, it's the only one I can think of, a roller coaster, can't it, of emotions. And you really do go through a process when you are investing. You go through, mentally, you go through challenges every day, can't you? And you get hardened to it, don't you? It's definitely not for the faint-hearted.
No, it's not. I tell you what, we've done our area.
Yeah.
Let's do this as part one. We'll do part two tomorrow, and we'll release it the day after. Is that all right?
Yeah, that's absolutely fine.
All right, so Thinking Wealth, if you are interested in looking at this dynamic investment hub, cryptocurrency, real estate and precious metals, the description to the website is below. Check that out. We'd love to have you on board. We'd love to see you there. We're still in pre-launch. We haven't launched it. No money's being transacted at the moment. We're simply sharing information. So if that's something you'd be interested in, check the description below.
Thanks for watching.
Bye-bye.